Here we have a very special panel with us. Nilesh Shah, MD and CEO at Envision Capital, as well as Vishal Khandelwal, founder of Safal Niveshak, and Rajeev Thakkar, CIO at Parag Parikh Mutual Fund. So they will be with us till the speech starts and what essentially to expect out of this. So first, let's start with you, Nilesh. Why is it such an important event?
Well, I think clearly Warren Buffett is basically the icon that we all value investors look forward to. And clearly he shares his pearls of wisdom on this very, very important day. So clearly I think when you kind of have a very strong belief in something, you'd always want to kind of go and revisit. It's like virtually revisiting your temple on a daily basis. So this is clearly more so from an annual point of view. And I think as time passes by, as years passes by, you clearly see him kind of go better and better and in a way reiterating what all he has been practicing for the rest of his life. And I think for us who've in a way just started our journey, I think it's always great to hear to somebody, you know, as successful as Buffett himself.
Right. Vishal, why is it such an important event? You've done extensive analysis. We'll talk about that. But why this event is so important for any value investor?
I think, as Nilesh said, it's like a mecca for value investors. So people go there, investors, there are like 40,000 people attending this time, I've heard. And I think people just go there to feel close to each other. They're all value investors. Buffett probably gives them a reassurance every year that you're not alone. Right, we all connected to each other through this value investing journey, and I think that's one of the biggest pulls for Buffett and Berkshire AGM that really brings so many people at this one event every year. I think so. That's the point, I suppose.
Right. I was with Rajeev in the cabin earlier, and he described Buffett as the rock star of the industry. So, Rajeev, why it is important?
So let's give the answer in Buffett's own words. He describes this event as Woodstock for capitalists. Now, people who are of a younger age may not be familiar with Woodstock. Woodstock was a musical event where people came from virtually all over the US and gathered for an event. And going to a concert is very, very different from listening to music on your iPhone or iPod. So this is an event apart from what Buffett and Munger say. All investors gather around and mingle among each other, exchange notes, and it's the whole atmosphere apart from, of course, what Buffett and Munger speak at the event.
Right. Of course, it will be an important event, but just, what to watch out for in terms of this entire space. So firstly, life after Buffett, that will be one of the key things. This time, the letter did not have that. Some of the investors across the world were expecting that to happen, but it did not come out. Buffett will largely defend his investment as far as Wells Fargo is concerned. Apple, that has to be the talking point, and what's happening with US trade relations or the noise coming around taxation into US China, that all would be very, very important. But as always, let's go to Nilesh on this. And Nilesh, you run a fund. You try and convince people to invest in the company, invest in the fund. Now, Buffett always says that ETFs over a period of 5 years, 10 years or 15 years would tend to do better than most of the fund managers. Now, in India, is that different?
I think so. I think India is a very different market. And clearly, India is still a kind of a very, very early stage of the economic expansion which India is going to witness for many, many decades. And clearly out there, there is basically a lot of opportunity in spotting value early on in a lot of companies which are still young, nascent today, but have the potential to kind of become really big. And I think in that kind of a context, an actively managed fund manager, in a way, has the potential or has the ability to do a lot better than basically the basic market indices over long periods of time. You could underperform for a year or two or maybe even 3 years, but I think 5-10 years, I still think that active managers in India have done a lot better. The other thing is that in a market like India where there's so much of beta, so much of momentum and all of that, it still makes sense to kind of take a step away from all that noise, all that action, and really be focused on identifying companies, selecting them and investing into them and holding on to them for long periods of time. And I think that clearly is a very different proposition versus the kind of proposition that you see in many other parts of the world.
Is it also because of the size of the US market, the size of the large cap companies over there? Could that be one of the key reasons?
It could be, and I think it's always a function. It depends on what kind of companies you're looking at. So even in the US, for example, if you were to kind of be investing in mature companies, then your chances of beating the market are going to be difficult. And I clearly think even Buffett's own fund over the last maybe 5 years, I'm not quite sure how it is done versus the market. I'm not sure if it's delivered significant outperformance. Versus that, if you've been investing in some of these new age technology companies which have done exceptionally well over the last 5-10 years, they have basically beaten the market by a wide margin, the Apple, the Google, and all of them. So I'm not quite sure whether this notion is very relevant only to a specific country or a market or not. I think it really is a function of your own style, your own strategy. And I think that makes all the difference.
Right. Rajeev, you also, of course, run a fund, talk to retail HNI investors. What is your sense? Is it different for India at this point of time, at least?
Sure. So I think, again, to use Buffett's words, he's answered the question on many occasions. One is, he says, size is an anchor on performance. As a fund becomes larger and larger, the flexibility and maneuverability goes down to that extent. And in the context of, let's say, ships and boats, a large vessel is difficult to turn around, whereas a small boat can be turned around quite easily. So when funds become very, very large relative to the space in which they operate in, the outperformance goes down. And the other factor which is highlighted in this year's shareholders letter is be cognizant of the cost that is charged to the fund investors. So you cannot have very excessive charges and then still hope to outperform by a wide margin. You should keep costs under control.
But do you think in India there are still funds, or the sizes of funds are still so large that they cannot generate that alpha?
Some of the funds are becoming larger as we speak, given the huge inflows into the mutual fund space. The performance numbers in the large cap space have shown that it's becoming slightly difficult to outperform, especially with the move to total return index and the strict criteria as to where the fund manager can invest. But I think small and mid cap funds, multi cap funds still have room to play and deliver outperformance.
Right. Vishal, you've done some extensive work on Buffett, and I was just reading your Twitter handle today. You said that you've learned a lot more from Buffett other than markets.
Yeah, there's so much to learn from Buffett, which is not investing. And I think that's one of the biggest ideas that I have taken from Buffett, that it's not just about investing money, savings. It's also about life. It's about character. It's about maintaining your reputation. It's about teaching the right things to your kids. So I think that's a bigger takeaway for me from Buffett and Munger than anything else.
Right. This discussion will continue, but on that note, we're taking a break, coming back in 2 minutes as well. So Nilesh, we heard the interview, and Ramdev said that it's an important event because he's the teacher of the world in the world of value investing. What will be your take on that?
Well, I'm not sure if teacher itself is a good enough word. Maybe he's anyway described as the sage of Omaha, and I guess he's now the sage of the world in a way. And there's so much, I think, from his own experiences. See, the good part, I think, is that he's not just an academician. He's not just a professor who's basically teaching at a university. He's somebody who's basically practicing day in, day out. He's practiced it for years, for decades. I mean, how many people in the world there are today who have a track record of more than half a century? I think that's tremendous wisdom to really pick on from. So my sense is he's not just a teacher, he's a brilliant practitioner, and he's truly the sage, and not just the sage of Omaha. I think he's the sage of the world of value investing.
Right. Vishal, they also spoke about the environment, the sort of, energy you could see around there. You think over a period of year it is building? You mentioned, I think 40,000 people are going over there, and it's one of the record inflows that they are expected to see. But how do you think such an environment is created?
I think it's, as I mentioned, it's a Buffett pool. I think people just go there. What Munger and Buffett are going to speak at the AGM or at the Q&A is not something which is new to the ears of the shareholders or value investors. They have heard the same things mostly over the years, right? I think people go there and people flock to such AGMs like Buffett and Munger just to get the reassurance that there is some sanity that still prevails in the world. So I think that's just the reassurance that creates that electric environment out there.
Right, and as Nilesh was also mentioning, his principles are known. Its principles are the way they are.
That's right.
Then why do you think there is no other Buffett for another half a century? I mean, his principles are same across the years. Maybe at least in the last 10 years, there's not much new that you can find.
I think you answered it, because they are the same. right? We all are looking for novelty, we are looking for complexity, and when someone, assuming go to a doctor and if he prescribes you just go home, take a hot water bath and you'll be fine, you won't find him worthy enough. But if the doctor prescribes you 5 different medicines, you think that it's worthy of his fees. Same with Buffett and Munger. I think just because they're talking about the same simple stuff for the past 50 years, people I think don't often believe them. And even Munger and Buffett, they themselves say very often that investing is simple but not easy. So simple is the stuff that is all laid out, but easy, not easy is the part that how do you behave? How do you really put that simple stuff into practice? So that is the not easy part.
Right. So we'll continue this discussion with our guest as well as go across live before the AGM starts. But on this note, we have to take a break. Coming back in 2 minutes. Hello and welcome back to this special Buffett Trail, as we are calling it here on ET Now, and we'll be covering what happens in that AGM. We still have our guest with us. Rajeev, let me come to you. You're one of the few people who have been looking at this AGM for really years now. And as we discussed earlier, the message has broadly been the same every year. What do you make of that? I mean, despite no changes, this sort of interest is what you're seeing. 40,000 is the number which Tanveer was just pointing out. Could be the sort of investors that would be attending from, I think, 15, 20,000. What do you make of this?
So sure, the basic principles don't change year to year, but obviously the world of business, the world of investing changes. So not only is he asked about the basic principles, he's also asked about various indicators like GDP growth, like interest rates, his views on politics, his views on education, on the healthcare sector. So apart from the generic principles, there are a lot of other takeaways which change from year to year. And again, in the interview, we saw that earlier he had a position against airlines, and now he's gone around and bought airline stocks last year. And again, he's bought technology companies. So there are a few additional takeaways each year as well.
Right. Vishal, you've done some extensive work on what are the basic principles that Buffett follows, or what is his basic strategy? Can you just tell our viewers about those 6, 7 different principles that you believe that he follows?
I think the most important principle is the starting one, which is an early start. So I think Buffett started investing when he was 11 years old, and you can imagine the amount of compounding that can happen between 11 and 87 years of age.
And he's still alive at 87. So,
right. I think as we were talking, we are just stuck up on this number of 87. We've heard stories of people who were 87 and survived till 120. And we've heard stories of people who are 40, 50 and were dropping dead at 60, right? So he may survive for another 40 years, who knows, and how much compounding that can happen over the next 40 years. So early start is one of the most important principle, and I think this is very relevant for investors as well. The earlier they start, the better it is. Interest in the subject was one of the most important principles again for Buffett. He was interested in this subject of value investing ever since he got hooked onto it at the age 11, right? So continued interest, being a learning machine over years. Even at 87, we talk about you hear about Buffett reading almost entire day, reading 500 pages a day kind of stuff, which is not possible generally for most of us. But constantly learning about the subject and not really thinking that I've learned it all. Another thing is a very important thing as far as business is concerned, being trustworthy. So Buffett being trustworthy and people trusting him with their own businesses, right, is one of the very important things. It's like a snowball, right? The earlier you start, you are trustworthy and you go on for a longer period of time. It really helps, and this is what Buffett has shown over years. And one final principle that has really made Buffett is that he's avoided envy, he's avoided common emotions like jealousy, he's not had strong ideologies, right? He's being willing to change his mind. Rajeev was talking about not looking at airlines earlier, now looking at airlines, not buying technology earlier, now buying technology, right? So changing your mind as the times change, not being envious or jealous of others. I think these are all the principles that
the point that you're making about this point that he's willing to change even after so many years. Right. Do you think that's an important point, because a lot of people in their ego are not able to change their investment style?
I think ego is one of the biggest blind spots for most investors. Just because we think we know it all, just because we've seen recent short-term success, right? We think that we've made it all, right? I think, and it changes the ages. When you're very young, when you're 25, you think you can be the next Warren Buffett. By the age of 55, you think that if you had been better version of yourself rather than trying to be Buffett, I think you would have made much more money and been much more happier in life. So I think That's the point about
It keeps
Buffett. Yeah.
changing. Nilesh, the point that he was making about early investing. So, of course, till now we are not seeing people investing into equity markets directly at 14, 15, 16. But you're seeing that as soon as people are getting their jobs, their income starts, the mutual fund saving is happening. So, at least the equity culture has started, if not direct equity investing.
Well, it's just started, I'd say. Still very, very early days. And I clearly believe that so far, on an average, Indians have been more attracted towards physical assets like real estate and jewelry. But clearly over, say, the last 20 or 30 or 40 years, clearly those asset classes have underperformed equities. And it's only now that financial savings are kind of gaining prominence amongst Indian families. And I think it's heartening to know that this whole culture of investing into equities through mutual funds and adopting the SIP route, what we are seeing is that that's actually gaining a lot more momentum amongst the younger generation. Like what you said, that people finish their education and then get a job, and the moment they see a sign of saving, it starts allocation. And I think that's a very, very healthy trend. And we just look forward to kind of this spreading and achieving a much, much higher level of penetration across a much larger number of families and individuals than what it has been. So I think that's something which will gain momentum, I think, as markets, and that's a part of the market maturing process as well, that when you have more and more direct participation from investors.
Right. Let's again go back to where this entire event is happening. Tanveer Gill earlier caught up with Karen, the CEO of Borsheim Fine Jewelleries, that has been a subsidiary of Berkshire Hathaway since 1989. She talked about leadership transition and Warren Buffett as a boss.
Berkshire is a 1 in a billion company, and I think people have that enthusiasm and have the trust in the Berkshire team, and I think this will continue to be part of it, and we look forward to hosting this year after year.
Yeah, absolutely. So tell us something. How have the sales panned out this year? Business-wise, how have things been this year? I believe last year you were telling me, something like one sale in every 11 seconds was happening?
That's correct.
That was the run rate?
We do have, on average, a sale every 11 seconds, and we are really at a good pace this year to surpass that.
That's neck-breaking.
It is. It is. It's overwhelming to have these many people here, but we want to help them celebrate. This is a special moment for them, and we love being a part of it.
Yeah, and shareholders come in from all across the world, and to just have a piece of Borsheim jewelry is like a prized possession for them, because in a way they think like, okay, we are owning a piece of jewelry from a company which is owned by Berkshire Hathaway, which is Warren Buffett's company.
Yes, it is. It's a special keepsake for them, and I think that's why we have such large crowds, and people love to see this and be a part of it. It's exciting.
I'm sure that internally as well, you guys must be discussing about the kind of cash that Berkshire Hathaway is sitting on, $135 billion and growing each year. It's a problem. Can you imagine cash being a problem for somebody, but it is a problem for Mr. Buffett?
Well, I keep telling him he could come in here and shop. But I think they are looking for, the perfect business to buy. He's very smart in the way he buys businesses, and he's very diligent in doing the research on that. So I'm sure that they will find the perfect business.
Karen, have you ever given him ideas on buying a jewelry business?
No, not
expanding Borsheims inorganically.
Right. No, we just love being the special part, and we love being in Omaha. So it's really special for us.
And so, how do you see the future for your business and for Berkshire Hathaway in the years to come? I mean, yes, there's growing excitement around this event. Do you see that continuing? And I'm not, even if Mr. Buffett stays on for the next 10 years, do you think that the level of interest will only increase?
I do. It's such an interesting phenomenon, and their success rate is so phenomenal. There's nobody else that does what Berkshire does.
We'll keep getting you voices, with the AGM. Of course, this is the pre-AGM programming, and post-AGM also, we'll keep getting you some voices over the next couple of days. But, in the world of investing, the most common and the most important phrases have always come in from Warren Buffett, but everyone has their own favorite. So let's start with you, Nilesh. Which is the favorite Warren Buffett quote?
Well, there are where there are plenty of them, but I think in the
Any
current
top
context,
two that you always,
no,
look
I think some of the things like basically I think rarely is there only one cockroach in the kitchen. I think given the kind of challenges which, say for example, the PSU banking sector is witnessing right now, and you're seeing quarter after quarter NPAs increasing, ballooning, new set of accounts going bad and all of that, and when we were observing all of this, and I think the quote which immediately came to my mind was when Buffett keeps saying that rarely is there only one cockroach in the kitchen, saying that you're not going to just have one problem in a company, there'll be many problems in a company. So I think that's something which purely from trying to kind of look at what is negative or what could go wrong, that's I think a quote which always comes to my mind.
Right. Rajeev, what would be your favorite quote?
I think when he says that it's better to be approximately right than to be precisely wrong, when in the analyst community world where people try to calculate the intrinsic value to the last decimal and use complex Excel models, he is someone who says that if you can't explain an investment thesis in a few sentences, or if you can't work out the value with normal multiplication and division, you should not get into such investments. I think that's my favorite.
Right. For you?
I think for me, it's when Buffett says that someone's sitting in a shade is just because someone planted a tree a long time ago. So I think that's Buffett's ethos, right? So,
Okay. Any other?
it's not really a quote. I think it's an experience that Buffett shares, and he talks about what he looks for in people when hiring them. So he says that we look for three things. We look for integrity, intelligence, and energy. And if the first is missing, the next two will destroy them. So I think integrity on top. Yeah.
Right. That's probably one of the key takeaways from. But if you look at the finance community, as Nilesh also started by saying that there are a lot of quotes and a lot of people follow a lot of them. But of course, everyone has one or two favorites one as well. On that note, we're taking a break. Hello and welcome back to this special programming. We'll soon cut across. We have been told that we have live visuals ready of shareholders waiting outside the AGM. That's the convention center where you can see, and that's the sort of interest that is there. These are shareholders that are waiting. Remember, the speech is still at least 1.5 hours away, and before that, you're seeing this sort of interest, this sort of environment which has been created over there. So definitely, people are eagerly waiting this year after year. And as our guests have been saying that over the years, it's broadly been similar messages that have come. And there you can see the big line over there to get in. It will only get, quite, crowded as the time goes by. 7:15, 7:30 India time approximately is when the speech should be available, or Mr. Buffett should start speaking in. Q&As will follow after that. That's always a procedure, and it's almost a 2 or 3 day entire event that you particularly talk about. So that's how it is, and it's a long 6 hour sort of a Q&A session that also goes through. You can see. Okay, you can see the line over there. That's the sort of crowd that you're already seeing. We have been discussing the sort of interest which has been there. So let's go back across to our guest. All of them are still patiently waiting with us. Nilesh, you cannot talk about Indian stocks because of obvious reasons, but you can talk about Apple. You think this Apple as a stock would be the most discussed stock in the AGM this time?
Well, it looks like because I think it's about change, like the flexibility that he has kind of has in terms of his thinking, his philosophy. So somebody who's really been a technology basher, I wouldn't say basher is the right word, but whatever it is, something which he's avoided very clearly. And then of course, before Apple, he invested in IBM, on which he's basically already acknowledged that was not honestly a great investment. So, and then having stepped into Apple, and especially stepping into Apple when not at so much at an early stage, but when it's kind of become a huge company. So I think there's going to be a lot of curiosity among investors and participants as to why Apple and why Apple at this stage. So that's something which I think should be of tremendous interest.
Again, that shows the point, as you said, why Apple at this stage is the largest market cap company in the world.
Right.
And with the largest fund manager going there, buying the funds, buying big stake into that company, still believing it's a compounder?
Well, I think what he probably, I think for him, because he does not have any pressures of short-term performance or medium-term, and I've heard him say when I went kind of 10 years back.
Right. Just last year, same time, we at ET Now created history by getting the first Indian channel to have interviewed Mr. Warren Buffett. Let's listen in a part of that interaction.
Hello and welcome to ET Now's special coverage, The Buffett Trail with me, Tanveer Gill. Now, we possibly couldn't have wrapped up our coverage of the Berkshire Hathaway Annual Shareholders Meeting 2017 without giving our viewers across the world the real treat. For the very first time on an Indian news television network, from his homeland, I have none other than the Oracle of Omaha himself. Yes, you heard me right. Mr. Warren Buffett is here with me for an exclusive chat. Mr. Buffett, thanks very much for taking out the time, sir. We really appreciate this.
Thank you for coming.
And I also want to extend out a special thanks for arranging this annual shareholder meeting for the members of the press as well. It's been an incredible experience for my team and myself.
Well, we want everybody to have a good time, and I'm glad you're having a good time.
Yes, we are. 52 annual shareholder meetings, Mr. Buffett, and still going strong. The thing about each meeting is that the world changes a bit between two meetings. And since the last meeting till now, the world has changed a lot. So what are your thoughts post this event?
Well, I love having it. I like seeing the people who really have invested with me face to face. And many years ago, 12 people attended, including 3 or 4 relatives of mine. And we want people to have a good time. We want them to learn more about Berkshire. We like the fact they meet each other. So it's always a time of celebration for us. Sometimes business isn't so good, but it's still a time of celebration.
Yeah, sometimes business is not so good. But, and, particularly at this time, sir, I speak to a lot of people, some of the wisest and the smartest people on the street, and they are concerned about the current global political environment and the global economic environment. Does that worry you, sir?
It really doesn't. This country, since 1776, it's moved forward in a way that no one thought was possible at that time. And we've had a civil war, we've had 2 world wars, we've had a Great Depression, we had flu epidemics, all kinds of things. And it always works out. I mean, I have no doubt about either the future of America or the future of the world.
But we live in a divided world. Does that not?
But we've lived in a divided world before. I mean, it was 150 years ago or so that this country had a civil war, and the North fought the South. So there's been, just in my lifetime, there's been huge conflicts around the world, and my dad was a Republican congressman, and he thought if the Democrats won that there would never be another election. I mean, all my life I've heard all these terrible things are going to happen, and here I am 86 and all kinds of good things have happened.
All right, so we'll be fine.
Absolutely.
Okay,
that is true.
At a time like this, world markets are at record highs. We are looking at a lot of markets hitting record highs. And the question really is, what is the market behavior telling us? Markets are typically ahead of the curve. Or do you think this time the markets are extending out on over-exuberance?
Well, the market really reflects people's opinions and emotions and eventually facts. My boss used to say, in the short run, the market is a voting machine. In the long run, it's a weighing machine. And I pay some attention to the market, but what I really pay attention to is the businesses that we own or could potentially own. And when we own shares of stock, we don't think of them as owning little stock certificates. We think of owning parts of businesses. And the truth is, you can buy a lot of very wonderful businesses, and you may pay out somewhat more for them than you would have a few years ago. But if you hold them, you're going to do fine.
Well, Mr. Buffett, I have to ask you this, because the U.S. bull market has entered its 9th year.
It's a long time.
Yeah, and the market cap to GDP is trading at 1.5 times. Does that not seem frothy to you?
Well, it would, if interest rates were, say, 6% for the long bond and 4% for short, then I would say that the valuation would look quite high. But against these interest rates, I would so much rather own stocks than bonds. And there's no question in my mind that American stocks will be selling for more 10 or 20 years from now. I have no idea whether they're going to be selling higher in 10 days or 10 months, but I never have had an idea. So I look at it and I say I can buy wonderful businesses at a fair price. I don't know whether the price will go up or down. I never have. But I do know over 10 years or 20 years that we'll do very well by owning those. So I don't pay attention to day-to-day markets or week-to-week markets, and I really never have had any ability to predict short-term market moves.
But if I were to ask you, to look at the crystal ball and see whether 2018, 2019 would turn out to be tougher years than what we've seen thus far, just given the timeline of this cycle, Would that be a fair assessment, to be more cautious into those years?
Well, it's true. It's been a very long bull market. It was a very severe bear market before it entered into this. That was unusual that way. So it was unusually worrying what happened in 2008 and 2009. So it may take a long number of years to fully recover from that. But I wouldn't worry about it. If you buy into a good business, let's say you buy a private business, a very good one, you're not going to look and see whether the market went up or down to the next day. It really doesn't make any difference. What makes the difference is how the business does over a period of time. And it's nice, it's more fun to buy them during a bear market when their prices are way down.
Yes, true.
But if you try and jump in and out of markets, I don't think that you're going to do very well. I've never been able to do well.
Hello and welcome back. Before going live across to where the AGM was happening, we were discussing about Apple. Let's further continue that discussion. So, Nilesh, you gave your point about Apple. I just wanted to ask, would you treat it as a consumer company or a technology company?
Well, right now both. See, I think the big difference between the technology companies which have really come up of late, they're more B2C companies. They are around the consumer. Unlike, say, around the year 98, 99 or 2000, most of those companies were primarily B2B companies then. So, the Microsoft, the Cisco and all of them were all dealing with enterprises. Whereas this time around, whether it is Facebook or whether it is Apple or Google to a large extent, they're all basically B2C companies. And I think therefore it's around the consumer, with obviously technology being their competitive edge right now.
Right. Vishal, you don't look at stocks primarily, I know, but when we just go into the AGM, you think Apple, airline, healthcare, what will be the most important talking point in sector or stock specific?
Maybe I think Apple, because of the recency bias, they did a huge deal on Apple recently, so probably Apple is going to maybe the biggest question that Buffett may be facing now. So I think Apple, yeah.
Right. For you, Rajeev?
I think Apple will be a big talking point, and again, given the fact that he's been so against technology and he's going all in, meaning now it's going to be probably the largest stock holding in public markets for Berkshire. So obviously, I think more questions will be on Apple than the other spaces. It's also a stock which catches public imagination. Everyone is familiar with the products and things like that.
They've also announced a JV on healthcare basis in Jan somewhere of Feb. You think his views on healthcare would now matter? They also have investments in Teva now. So how do you think that would pan out?
So there have been numerous interviews of Buffett and other people after the announcement where three parties are coming together to try and reduce the healthcare costs. And he's been on record saying healthcare costs are a tapeworm on the US economy. So obviously there will be questions on that. But I think so far clarity is not there for people as to exactly what form this will come about. So they have been looking for a person to head that venture and take that forward. Specifics are not known yet.
Right. What's your view? How do you think airline healthcare would be viewed in this AGM, or how investors would take his comments on that?
Well, I think I think these are going to be the topical issues for this AGM, because again, airline is something which is kind of in a way always not been too particularly positive about the airline industry, and now he seems to be a lot more constructive. So obviously that's going to be the talking point. Healthcare is something which affects everyone, and healthcare, the cost of healthcare in the US. So clearly, I think what most people who kind of are going to be asking around healthcare are going to be more figuring it out, that what is the kind of proposition that he sees in investing in healthcare, and whether that will eventually lead to bringing costs down and all of that. I think it also kind of in a way opens up the social perspective of Buffett, saying, how do I really help the average consumer? How do I solve a problem? I think that's also going to be the added perspective.
Vishal, every year, there is again that big speculation that will investment in India, investment in China, other emerging markets be a part of this AGM? What do you think?
I think as Rajeev mentioned, I think there may be a question on from Chinese investors about investing in China, or from Indian investors. So there may be a question, I think, but the bigger questions are going to be on healthcare, on Apple, I suppose. I remember listening to his AGM last time, and there were pretty tough questions on Coca-Cola and people consuming Coca-Cola, because Buffett is like promoting kind of sort of stuff. So this year, since he's added healthcare, I think there's going to be a lot of contradictions, a lot of tough questions, because on one hand, he's sort of promoting Coca-Cola, and on the other hand, he's talking about lowering healthcare costs. So I think that may be a point of contention for Buffett over here.
Another thing that I think will be in highlight this year, and which has been for 1 or 2 years, has been the developments on the self-driving vehicle and technology front. So this affects two of his very large businesses. One is of course Geico, which is in auto insurance.
Of course.
And if technology improves and reduces car accidents, then premiums would crash, and maybe someday the ride sharing companies would self-insure, likes of Uber and Tesla and all. So that is one question. The other thing is that if this takes place in a big way in the trucking space, then it would be a competition to his railroads, because in trains typically you have to take the goods to a train, unload, load on the train, then again reverse it out at the end point. Here if you have self-driving technology, the trucks could go from point to point on their own or with minimal human intervention. So that would be a key topic, talking point, I think.
So Nilesh, there can be a talking point about investing in India or any other market, but do you think the size at which he operates, some of the emerging markets are still nowhere close to that? Or companies are nowhere close to investing?
I think he's been a fan of America. Okay, and one of the reasons why he actually, and I think it's all about being modest, but he's always basically said is that, I'm actually lucky to have been born in America. And I think the kind of investment universe that he sees in America, I think he sees an incredible opportunity. Somebody who believes for the next 30, 40, 50 years, clearly for him, America provides not just growth opportunity, but a very stable and a durable opportunity. And then of course now, it's also a question of size, that where do you get companies of that kind of a size? Look at Apple. They're talking of $100 billion, buyback, just a buyback. And on the other hand, you have companies in China or India who are just barely touching the $100 billion market cap, this thing, okay? So it just shows the kind of relative size of the opportunity. So I think it's his confidence in America. 2 is basically the durability of this opportunity, and then 3rd, of course, it's his own size.
Right.
So on the India-China question, interestingly, Mr. Munger has pretty strong views. He doesn't look at India too favorably, and the thing that he often quotes is the Orissa steel project with POSCO, and they were actually having some exposure to POSCO. So Mr. Munger does not have very positive views about the way Indian government machinery works, and on the flip side, they have investments in BYD, a Chinese company, and they are fans of China in that sense.
But that will be a talking point according to you.
1 or 2 questions could be there from the audience.
Right. Let's just listen to one of the other CEOs of Galway Asset Management. We spoke to him on the sidelines of this AGM. They have been attending this particular AGM quite often.
Does he expect the multiple of companies that he might want to buy entirely, will they be sustainable? Mm-hmm. What multiple of EBITDA was he thinking about 5 years from now? And that's important, because if interest rates rise on the 10-year bond above 3%, what impact does that have on valuations? So that's what I'd like to hear. The second thing is, why did Warren Buffett all of a sudden allow things that he wouldn't do in the past, like buying Apple, a technology or as a business or a consumer products company? Mm-hmm. Also, why would he want to buy airlines, which he said in the past, you want to become a millionaire, start with $1 billion and buy an airline, because you're going to lose your money.
True.
So why is he doing that? And then obviously there are certain things going on with regards to corporate taxes, with regards to regulation, that he'll be commenting on.
Yeah, but you've also, I read a piece where you spoke about, you want to hear from him about the future of cable television. You want to hear about healthcare costs. What's his opinion on all of that? Is that also part of?
I don't think Buffett is going to talk about cable television. I don't know if he cares about that, but Todd and Ted, who run his public money, Ted has been very important in doing some work in the broadcasting area. Todd has been very important. So that if those investments show up, so when you look at his holdings, he has 200 billion US, and the top 5 names are about 100 billion, 120 billion of that.
Yeah.
And then below that, you have a lot of names, but part of those are Todd and Ted buying them, the two other investment gurus that he has.
Yeah, exactly. And you know, the interesting part about their investment philosophy is that their investment arm has just now invested in Teva, which is an Israeli-based pharmaceutical company which is in the generics business. So when you're talking about healthcare costs coming down, that's the generics market is the big market to focus on. Do you hope to hear something more from him regarding whether he's excited about that space?
That's a very good question, because Warren Buffett in the past said that medical costs in the United States are rising, and they become, he used the word tapeworm in your body, eating away at the American system. So he and Jamie Dimon, who's the head of JP Morgan, and Bezos, Jeff Bezos, who heads up Amazon, have come together to look at healthcare.
Yeah.
And how are they going to address this? This is going to be a question asked tomorrow, which I did not point out.
Yeah, no, and the reason I ask you this question is essentially because in India we have some great generic pharma companies which are supplying to the US.
Yes.
And I was just wondering, okay, when will Mr. Buffett look at India and look at opportunities there? He's sitting on $135 billion. When is he going to make his next purchase?
He would, I assume that one has to bring it to his attention, and it will happen. And clearly with your comment about generics and Teva, there are plenty of companies in India that he should focus on.
Oh, absolutely. I want to talk about the fact that, you know, right now the world is squarely focused on interest rates being a big risk for the current market environment. You know, this has been a 10-year bull market, and everybody's worried about what will lead to the tipping point, what will essentially cause the tipping point for the markets to come off. They are fearing a correction which hasn't quite come yet.
Yeah, but the volatility in the market is what I call the, in quotes, old normal, close quotes. In other words, we always had that. It's only been the unusual events of the last 12 to 18 months until February of 2018 that the U.S. markets were, you know, not volatile.
Yeah.
So from my point of view, price could be too high, speculation could become rampant, there could be a geopolitical dynamic, but also if interest rates go too high, or if there's a tariff war that people are uncomfortable with. So it's the loss of confidence that you can expect, and that can happen at any time. From my point of view, you know, if interest rates are 3.5%, 4% on the 10-year U.S. bond, that's not so bad.
That's not bad.
No.
And we've seen that actually, you know.
If it comes too quickly, however, that's bad.
That may be bad, because I remember 4 years back when, you know, the yield, I think that maybe 3 years back when the yield hit 3%, world markets went into a tizzy. But we haven't quite seen the same reaction right now, which just tells you that maybe the markets have taken this on board.
The U.S. Treasury bill is about, for 6 months, is almost 2%. The German Bund and the Japanese currency equivalency are still not positive.
Not there, yeah.
So we have to make some adjustments. Stepping back, the Federal Reserve in Europe with Mario Draghi, with now Janet Yellen and her successor Jay, have put $4 trillion or 10 trillion on a global basis that they're withdrawing. So that's going to happen, and the question is, do we have enough economic stimulation to provide growth while this is going on? And so, work in progress. You have to continue to think about the details of how that works to see how it works out. I'm reasonably comfortable.
You're reasonably comfortable, Mr. Gabelli, but how do you see the road ahead on rates? Because so far it's been very measured. You know, the pace of hikes has been very measured, very well communicated to the markets, well documented. If things change on inflation, given what's happening with oil prices and core inflation also picking up as is expected, you know, and the whole outlook on rates changes just marginally so, would that make you a bit nervous if rates were to go faster than currently higher?
Well, if they go faster, when I look at the world of my companies, if you have global GDP with established countries growing at 2% or 3%, and the rest of the world growing 5 or 6, like India, even faster short term.
True.
If you put it all together, what happens to the inflation part of the revenue stream? Will companies be able to pass along price? And will that have an impact on their multiples? But make it simple. If rates go up too fast, it's a problem. But it's not only rates, it's how fast do they take money out of the system.
Yeah.
So they put a lot of money in 10 years ago, and now they're pulling it back. Draghi has to do it in Europe at some point. We're doing it in the United States.
Yeah.
And so that's what we look at. In other words, monetary policy was a tailwind.
Yeah.
Now it's a headwind. And fiscal policy and economy has to be supplying the balance.
That's
and we
true.
have that in the United States. And we have it okay in Europe with all of the problems. You know, the Russian tariffs, the Chinese tariffs, and those are issues that we have to work our way through.
Rajeev, what will be your views? How important will it be for global markets, including India? His views on what's happening with taxation, what's happening with the tariff war or the noise around tariff war?
On taxes, he's made his mind clear. He said that the steep cut in corporate tax rate is very, very positive for the equity markets, and it directly flows through to earnings, and equity should quote at a higher multiple because of the tax cuts. He said that interest rates, at least till 3%, should not matter too much. So how long elevated valuations can be sustained in a rising rate scenario, that there could be some revisit. People could ask him questions. Tariff war is a new thing. I don't think he's spoken much about it. So I'm sure people will be wanting to hear his views. But again, typically, if I were to guess, he would say, oh, these things come and go, and 5 years, 10 years out, it does not matter, and people will come to some understanding finally.
Right, but do you think those views would matter for global markets?
I don't think based on one statement or two statements, markets would dramatically react.
Right.
I
Vishal,
don't see that
what will
happening.
be your understanding about?
I think I go with Rajeev as well, because he's made out his stance clear on a lot of these topics, even outside the AGM as well. It's going to be a 6-hour long AGM, right? So a question and answer session. So there are a lot of questions that are going to be asked, right? So these questions, I'm sure, will be a part of the session. So I'm not sure about the impact on markets after that.
Right. Nilesh, what do you think about the airline sector that is going to come in? I mean, it's a topic which has been going on for the last 15 months. But do you think it's interesting how these airline stocks, not only in US, but even in India, how they are performing, the sort of cyclical turn that you've seen? You think that they can be looked at FMCG company minutely?
Well, they are FMCG companies from a B2C point of view, that, you basically carry so many passengers and all of that. And then, of course, there's always the value migration theory which gets propounded, saying, a lot of Indians are now more traveling by airlines versus trains and all of that. But the reality is that, there is so much of volatility in their earnings.
Like we saw for Indigo.
Exactly. Suddenly you see earnings getting shaved off by such a large percentage. That's something which differentiates it. So, and if you really look at the reason why, for example, the earnings fell, is because there's pressure on yields. And when you say there's pressure on yields, which means you don't have pricing power. Okay. Now, that's where really the similarity between FMCG and airlines ends, because clearly FMCG companies, in a way, there's predictability. They may not grow at that kind of a pace, but there is predictability, their margins are stable, there is pricing power, they can kind of tweak around with their prices a little bit here and there and ensure that margins are sustained without sacrificing on volumes too much and all of that. So we've yet to see this in airlines, and I think that's clearly where investors need to understand that, yes, at the starting point of time, it is a B2C business, but that's where the similarity ends.
Right. Rajeev, what do you think would be the comments on airlines? Or, of course, it's an old story, but do you think airlines would still be a talking point?
So one thing I would like to highlight for viewers and investors in general is, don't try and imitate the Buffett of today, or don't try and imitate the Berkshire of today. Today his problem is excess cash. He has so much money coming in through all the businesses he's accumulated over the years that he has a problem of deploying. That's why he's buying railroads, he's buying airlines, he's buying electric utilities. These would not be his choice if he were running a far lesser corpus or far lesser balance sheet. So for a individual investor or someone running a small fund, I don't think these would be the first choices either. They would look at the kind of C's Candies kind of businesses which Buffett would buy in his early part of the career. And again, if you talk to someone like Monish Pabrai, he also reiterates this point that don't try and imitate someone who is running hundreds of billions of dollars and try and do those same things yourself.
Well, I don't know that how did you use the word Monish Pabrai, because Tanveer is just getting him mic'd up. So in the next 30 seconds, we'll have him. But, just Vishal, your point on airline or some of these sectors that have earlier been cyclical, but now some of these investors are coming in. You think it's a problem of excess cash that is forcing them to look at these sectors?
I'm sure I think it's a problem of excess cash for Buffett, but I think he's also made clear that things have changed a bit in the airline industry in the US specifically. He's talked about consolidation, he's talked about companies showing sustainable profitability, he's talked about low crude prices as well. So I think these are more fundamental long-term sustainable factors that I'm sure he's looked at while investing in airline companies. Now it would be a dangerous thing to copy the same model into Indian airline business, as I think Nilesh said, that we are still a new market, a young market. Yes.
Okay, I think let's cut across. Okay, we'll just go across to that. So that's it's about in the next 1-2 minutes you should get Monish Pabrai as well as Ramdev Agarwal along with Tanveer. So we'll just go across that. So Vishal, could just continue your point that excess cash has been a problem, but consolidation has also happened. So sector has changed.
Yeah, in the US. In the US.
Yeah, in the US.
And if you look at US airline companies, a lot of these bigger players have shown sustainable cash flows for a long period of time. Right, so definitely Buffett has changed his mind over a period of time. But I think, as I mentioned, I was talking about it's dangerous to put the same model and invest in Indian airline companies, just because Buffett has invested. Things have changed for Indian airline companies as well. So I think things are different here compared to US, and I'm sure Buffett will be answering a lot of questions on airlines today.
Right, but just again coming to the point that we had also touched upon earlier, that changing changing the view on any particular sector on the basis of what's happening, it's a tough call that investors have to take, which Warren Buffett has time and again taken.
For most of us investors, it's very difficult. It's almost impossible. We are like ostriches, right? When it's a point of changing our mind, we actually stop looking there, right? So it's a genius like a Buffett or very like legendary investors or serious investors, long-term investors who have that ability of changing their minds and accepting their mistakes or just moving ahead in life. I think it's impossible for most of us, to be very frank.
Nilesh, you think that's why a lot of people missed out the rally in select infra names, because they just believe that infrastructure sector could not do well because of despite the changes that have happened?
So well, it depends on what your perspective is. I mean, if your perspective is maybe a year or 2 or 3 years, then obviously, of course, you can't afford to miss out on these kind of opportunities. But if it's only returns.
Nilesh, I think that, so let's go back to our guest, get some perspective, just last perspective going into the AGM. Nilesh, what is your favorite quote? What's the favorite learning that so many years you've been tracking Buffett, what's happening over there? What's your favorite quote and learning?
Well, many, but I think the most of all is, I think, the long-term orientation. I think that's clearly one important thing which honestly I think I've picked up from him, that there's really a lot of power in having a long-term orientation. That's really where basically that's the starting point of compounding and how things can just basically grow and multiply over a period of time. Sticking to quality, having the right temperament, patience, discipline. I think there are so many things that you think of Buffett. And I think most important of all, I think by and large most people in the markets or in the investment world in a way really don't know the difference between price and value. And clearly, right from Benjamin Graham, Buffett, they all have harped so much on trying to understand this basic difference between the price of a security and the value of a security. I think these are some of the most important things I have picked up along the way.
Right. Rajeev, what would be your one thing to watch out in the AGM? Why it is so important? We had such big investors down the line over there. You have gone there to try and attend this particular AGM. What's the one thing that you would watch out in this AGM?
So rather than look at just one thing, it would be a broad array of business environment related questions that would be put to him, and he would give his views on various sectors. As we have been discussing, one of the key topics this year would be his investment in Apple, and a lot of discussion would happen around that.
Right. No, I did not mean that, particularly about Apple or airline. I just wanted to say that why it is so important despite he keeps repeating the same principle again.
Sure. So the reinforcement is very important. People get drawn into so much stimuli every day, where people look at daily stock price movements or try to figure out the next move on the market. Benjamin Graham and Buffett have been reiterating that ownership of a stock is ownership of a business. It's not a symbol which goes up and down. I think that reinforcement is required from the.
So it's just reinforcing that values and principle once again into all of these shareholders.
Correct.
Right. Vishal, just talking about what you have learned over a period. So we'll talk about the non-market thing. But first, how would you describe Mr. Buffett? Why is he so successful? What are the key points that you've analyzed over a period of time?
I think like Gandhi's, I think Buffett's life is the message that he has given to shareholders and investors and followers over the years. And I think the biggest takeaway from his life, his experiences is that compounding is back-ended. Right, you don't see the benefit of compounding 3 years, 4 years, 5 years. You see in 10, 15, 20, 25 years, right? And you have to wait that time to really see the benefits of compounding. And if you can start early and wait that time, I think there's no stopping you. So Buffett has said it many times. Investors look at returns, but in compounding, time is the most important element. So you start early and take a long-term view. I think that's the biggest takeaway from Buffett as far as investing is concerned.
Right. And about your tweet regarding learning in life from Buffett?
Yeah, so I think I mentioned about that. I think Buffett says you can lose your money but never lose your reputation, right? Focus on integrity, learn to say no to a lot of things. He has his too hard a bucket, right? So focusing on saying no to a lot of things is very important, having a long-term orientation. Personally, for me, I think two big ideas that I've taken from Buffett is that you need to be a good writer, good communicator if you want to become a good investor. I think that's they go by together. And I think teach your kids the right aspects of life very early in life. So I think these are the stuff.
Thank you so much, gentlemen, for taking out time for us on this